If you go to conferences, and Paul Theron doesn't go to conferences, but if you go to conferences, you would have had some twit stand up at least 3 times in the last year and tell you that we live in a VUCA world. It's volatile, it's uncertain, it's complex, and it's ambiguous. The reality is it's always volatile, uncertain, complex and ambiguous. That's just the nature of the globe. But certainly where markets have become overblown, there have been some big sell-offs. We saw it in the last quarter of last year. Some major Asian markets also in uncertain territory as to whether or not the United States and China can end their trade impasse, or as others like to call it, the trade wars. We try to paint a picture as to what you can expect in the year ahead with the Vestact Chief Executive Paul Theron and Portfolio Manager at Sasfin Nesan Nair. Let's go local, let's go local retail, let's tell horror stories until nobody can go to sleep at night, because the retail sector finally is beginning to develop a relationship with reality, isn't it?
Yeah, I mean, it started actually last week with Woolworths' update. Market was expecting 4% sales growth. They were under 2. Then you had Mr. Price shortly afterwards on the same day. Market was expecting over 10. They had 5.6, and of course, I mean, it just kind of snowballed. We had ShopRite where we were expecting 5% growth. That was flat on the sales front, and then Massmart later on, where we were notified of a big drop in earnings. I mean, earnings are going to be down almost 30%, between 25 and 35%.
Why is anybody surprised? I mean, I don't know if you spent any time in the shops in November and December. I spent as little time as possible, but the few times I did venture out, it was actually quite pleasant, because there weren't many people there.
I think there's some changes that are taking place. It's also worthwhile mentioning there's a disconnect between the Stats SA retail sales growth number and what we're seeing in the mainstream retailers. It could be that a lot of sales were moved back towards the Black Friday event. I think a lot of people do.
That's still November, and it's still, I mean, I think Massmart was saying we did Black Friday and that was rubbish.
Yeah, but compared to last year, there was a little bit of growth. But what we're not seeing is the online sales number from the big online guys, the likes of Takealot, for example. Now that you can buy some stuff on Amazon, how many people are actually shopping online? It's difficult to see.
Tiny proportion of South Africa's overall retail. The reality is, Paul Theron, that fewer and fewer people feel sufficiently economically empowered, rich enough, to go and do the sort of shopping that perhaps they did in faster growing economic times.
I think that's clear, and the banks have been cautious because they also don't want to extend credit into an environment where people are losing jobs. There's massive potential job cuts at Eskom coming. There are job trimmings that have been happening at major corporates, the banks and other sectors, so that's a worry. I don't know, though. I've been covering retail stocks and thinking about them from the time when I used to have a lustrous head of hair like Essen here.
About 40 years ago.
Exactly. And my concern is there's always somebody winning in there, but at the same time, there's the overall cycle of the economy. So now Pick n Pay have been doing well and ShopRite have been losing market share, but 10 years ago it was the other way around. Also, in the last 10 years, we've had a heroic run from Woolies and then a big slide. So I'm getting quite tired of retail stocks generally because, in a way, they all sell the same stuff and it's tough out there, and there's the international competition now. Another thing we're perhaps missing is that there are those guys that have taken
the Cotton Ons and the H&Ms and those guys.
Yes. And they've come in hard, looking to gain market share. So I don't know what really to say. The only way to hold retail stocks is ultra long. I'm going to take a 20-year view and I'm going to sit tight and hold ShopRite and see where it takes me. To try and trade them and move from the one to the other, or get in when they're going well or get out when they're not doing well, seems impossible.
But that is also, I mean, in terms of proper investment strategy, that is generally the thing to do, unless you bought shares in Steinhoff 20 years ago.
It's tough to hold a stock for 20 years, though, through a period of 10 years where they don't do well. It's already tough owning some of them.
And even the loved stocks, I mean, if you look at Discam now, all the way up to 39, it's back at, 24, 25 now. So even the stuff that people generally love, and the foreigners generally love.
But the Clicks trading update this week, and we've only got Clicks to go on in that sector, was pretty robust. People are prepared to spend money on stuff they smear on themselves, and creams and potions and lotions and that sort of stuff to look pretty, even if they don't feel pretty on the inside.
It was okay if you compare it to the rest of the sector, but the previous update from Clicks and Discam, I mean, sales growth was in the double digits.
Yeah.
And here we're now seeing it at 8.5%, and you just wonder.
But are our expectations not just too elevated? I mean, we sit in the real world where we know all the stuff that is happening, yet we still expect that these guys, by some miracle, hook or by crook, are going to keep delivering double-digit growth, and it's just not realistic.
I think that's definitely true. If you look at the P ratios of the retailers, generally they're in the mid to upper teens. I mean, the likes of Clicks and Discam are north of 25.
Still too high.
Still too high, and I think it's a reflection that people have that generally optimistic attitude about retail, and there may just be a reset to reality right now that's required.
Why is it that retail and banks, which are kind of in the same category of risk, retailers lend money to people to buy things that they don't really need over the short term and hope to do it again in 6 months' time? Banks lend money usually over the longer term, but in many cases, increasingly so, short-term loans at high interest rates. They're exposed to the same sort of dynamics in an economy. Yet banking shares, considerably cheaper, holding their valuations far better than a much more choppy retail sector.
I think banks are always relatively cheap relative to earnings because they're hard to really understand. The one plus that retailers have is that they don't suffer from too much government regulation. If you're in the cell phone business, you have to ask for permission from ICASA to raise your rates. The government doesn't care what you sell in your mega store. You can take your chances, and it's relatively simple. So people feel more comfortable putting higher valuation multiples in the good times. Banks are, complicated. They have funding costs, and if there's a sovereign debt downgrade, then they cost what? What does that all mean? Oh, no, I don't want to buy those.
Yet, dividend yields on these things are sitting at better than you can get cash in the bank. I mean, you're being paid almost to take the risk to buy some of these things.
I like our bank shares, except for the broader backdrop concerns about,
Reserve Bank
Eskom
independence,
and all
the
of that
attacks,
stuff.
the
Blah,
assaults,
blah,
and all
yeah,
that.
yes.
The politics gets in the way of good investing decisions. Wrapping up this edition of Taking Stock after the break, we're going to look forward into 2019 and see whether or not, and this is always wrong, by the way, so what I recommend that you do is you watch this with great detail and do the opposite. But from what we know now, with the inflation number coming out this week at 4.5%, pretty much bang in line with expectations, thanks to a falling oil price, which has brought down the petrol price very sharply from November into January. Lots of things going South Africa's way, but the forecast is still dark, the forecast is still gloomy, and there are lots of uncertainty still to play out as 2019 progresses. Is there anywhere safe to top up your retirement annuity, for example, as we come to the end of the tax year? Let's pick up on that in a moment.